I think our inflation forecast is pointing to a good inflation outlook. We're still already now very close to our target, and our forecasts are pointing for a 2% inflation in the coming months and years. Of course, there's a lot of uncertainty around that. We've got a little bit of a backlash in May, so we want to have a little bit more of time until we decide to cut. So it's a guiding that we might cut 2 or 3 times in the autumn, but didn't cut now. And the reason is that we want to do this in a gradual manner, so we don't, let's say, ease too quickly.
Yeah, and despite saying that caution, though, I mean, adding 3 or the number 3 and saying that there could be an additional 1 to the 2 that you had initially said, for example, in May, why would you open the door perhaps for faster rate cuts than in previous communication, if especially inflation is anticipated to perhaps be in line with expectations?
So they are in line with expectation due to the interest rate path that we also decided upon and that we published. So inflation will come down given that we actually are easing monetary policy according again to forecast, because they are of course very uncertain. No, I think it's prudent to actually guide what your thinking is, and inflation behavior has been much better in Sweden the last half year. Inflation expectations come down to be in line with the target. And also Sweden, compared to many other countries, has much more well-behaved wage setting. So our wages are much more in line with the inflation target if when you compare, for example, with some of the data coming from the euro area, or for that matter, Norway.
Yeah, are you wary though of that sticky price pressure that is possible? I mean, you're citing concerns or caution, should I say, for a reason, aren't you?
Yes, and we do have this as a main forecast, 2 or 3 cuts, but we are highlighting risks, and one of the risks are the price setting behavior. We would know that that firms actually increased prices more than we thought when we had the inflation upturn in 22-23. We now see in surveys that they might be back to, let's say, more normal price setting behavior, because it's a lot of uncertainty. What happens when demand picks up? Will the price setting kind of move in the wrong direction? So that's one of the risks that we point out. And again, 2 or 3 cuts is a forecast, it's not a promise, and we will adopt monetary policy according to incoming information.
Yeah, here's something though, Governor, that we're also seeing out of the UK, the government declaring victory against the fight in the fight against inflation. I mean, what is your sense on commentary and rhetoric like that? Is the fight somewhat something you can declare victory on?
So our finance minister had a little bit the same wordings that I said today in the press conference. They have their wording, I have my wording, and my wording is that we see that inflation is coming down. We see a risk to that inflation outlook. We could also could see a risk on the downside. We think that inflation will be in line with the target in the coming years. But the wording of fighting or we won the war or whatever, that is their wording, and I think should be like that.
Yeah. So what would you need to see then in the next inflation figures, for example, for you to perhaps look at cutting in your August meeting? Are there specific data points, a specific level perhaps you'd want to target even for the headline inflation figure?
No, not really. I think the headline inflation number, as you did, the one that we measure or look at, is fairly well behaved. The worry has been a little bit the number excluding energy. But I would say that what we're saying is that we will cut 2 or 3 times during the autumn if forecast is actually, if that comes true. And of course, so we don't need to have a super positive surprise. We need to have data coming in line, overall in line. Of course, not all the data will be exactly as our forecast. So I think that would be the main message. And we are a little bit cautious of pinpointing August versus September or November for that matter. We are saying 2 to 3, and then incoming information will decide, on what meeting we move, or for that matter, if we move at all. But of course, it is an uncertainty, but it's a guiding. It's our best forecast at this time.
Yeah, you've also, raised growth projections, though, for this year quite significantly. In March, you had projected 0.3% growth for this year. It's now 1.1%. Is that raised growth prospect the perfect platform then to cut rates from, or do you cut rates because growth rates have now improved?
No, I think we explained that growth figure in some detail in the report, and it's very much due to a strong outcome the first quarter, which again was influenced a lot by the inventory component. So if you look on the underlying demand situation in the GDP numbers and also production numbers and more in general, I would rather say that we see a little bit weaker economy in 2024 than we thought a couple of months ago, although the number as it's presented is actually a little bit higher. So the momentum is picking up. We see a little bit better growth perspective, but let's say a little bit slower pace than we thought in the beginning of the year.
Yeah, so I mean that highlights then your caution as well that you went back to, that we started off with in this conversation. What are the biggest shocks that may be concerning you at this stage then? I mean, would you be looking through those shocks as well? You know, for example, the oil situation, those are shocks that perhaps you looked through as they weren't too much of an impact on your economy.
No, so we had an increase to the oil price, and that has not been a great impact. But I think we are concerned about potential supply shocks from the, let's say, geopolitical situation. There's still a for sure a threat to this outlook, a risk to this outlook, and that's something that we say we have not incorporated in our forecast. But of course, you could have freight prices going up, you could have energy prices going up, and other things that could disturb this. We also actually talk a little bit about the risk for, you know, what happens with risk premiums and the debt situation in some of the sovereigns around Sweden. That could also, of course, cause some turmoil in the financial markets. So with the French election coming up and all that. So there's a lot of risk, but that of course risk that we need to have on our radar screen, but it's not something that is easy to incorporate in the forecast, so to say.
Has the appreciation then of the krona, which we really have looked at as well a lot of late, has that made the job a little bit easier for you in terms of deciding when you can cut rates? The first one that you put out, of course, a few months ago as well, and now saying, you know, the ability to have as many as three possibly. Is it because the krona's appreciation also has played a role here?
I think it's very, very hard to understand what drives the krona. I think when we did a cut in May, we did it 1 month before the ECB, and of course, a little bit uncertainty still whether the ECB should move at that stage. That caused the weakness of the krona that day, that week, and later it strengthened. So it's very, very hard to really understand what drives the krona. Of course, interest differential have something to do with the overall kind of outlook for the currency. So. But I think, you know, partly yes to your question. Of course, would we have seen a strong, persistent weakness of the krona following our May cut of interest rate? That would have been something that would be kind of impacted our easing process in a negative way. Now we got the other way around; it actually strengthened. But we're very humble here. You know, it could weaken to previous levels just in a couple of months' time. Who knows? Because this is extremely volatile, and we have to look on the kind of the more long-term trends.
Yeah, Erik, I wanted to ask then on just overall, Governor. If one takes a look at this time, with interest rates having gone the way they have, inflation having spiked up the way it has as well of late, has this kind of made central banking a little bit more adept to actually communicating better? Do you think that that's happened a little bit more, particularly for yourselves? Has this meant you've had to be a little bit more thorough in your communication to markets in order to give a clear sense of what it is you're anticipating?
No, I think it's important for us to both communicate our kind of main thinking, but also to discuss around that main scenario, what are the risks? And to be open where we are a little bit more certain and areas that were very uncertain. Very uncertain, one area is, of course, the exchange rate. So, yes, and we, if you compare to other central banks, we still have this guiding through the interest rate path. And that's not all, you know, sometimes it's very complicated because it goes wrong. You say something and it turns out to be the other way around. We still think it's important to try to have that kind of forward guidance, but surround that messaging with a lot of that uncertainty that there is there. And I think it played out pretty well recently anyway, that we have been guiding, and the guiding has been fairly consistent where we actually were, where we've been a couple of months later. But hopefully that will stay for some time. But this is risky. Of course, you could have another strategy, basically saying you're totally data dependent and you don't guide anything. We think that this is more transparent and more prudent from a Swedish perspective anyway, and we stick to that.